Hey out there, this is Highly Rainy with Credit Renovators back at you with another helpful tip for you guys out there trying to get establish business credit so that you can get business funding. I'm giving you some tips here to help you with that process if you're looking to do it on your own. Now, when applying for business loans, many small business owners are surprised to learn that their personal credit can play a role in the approval process. Lenders often evaluate both your personal and your business credit to assess your financial reliability and the likelihood that you'll be able to repay the loan. While having strong business credit is essential, your personal credit score can also impact your ability to secure favorable loan terms, good loan terms, especially if your business is relatively new or you haven't yet established a solid credit history. In this video, I'm going to tell you why lenders consider personal credit in your business loan application and how your personal credit will affect the approval process, and what you can do to strengthen both your personal and business credit profiles if that's needed to get you your approval. So, let me start by saying that lenders evaluate personal credit for business loan applications for several reasons, particularly when it comes to small business startups or sole proprietors. Many small businesses, especially newer ones, have not yet built up substantial business credit history. And in these cases, the lenders often turn to the owner's personal credit score as an indicator of how the individual manages their personal financial obligations. Your personal credit scores give lenders insight into your reliability when it comes to repaying debts and managing credit. If your business is relatively new or has limited credit history, a strong personal credit score can improve your chances of being approved for a business loan. Okay, there's personal guarantees. Even if your business is established, some lenders require a personal guarantee for certain types of business loans. A personal guarantee means that you, as the business owner, agree to be personally responsible for repaying the loan if the business cannot. If your business defaults on the loan, the lender has the right to pursue your personal assets to recover the loan, to recover the debt. Now, lenders look at your personal credit and they assess it to evaluate your ability to fulfill the personal guarantee if necessary. A high personal credit score signals to lenders that you are financially responsible and capable of managing both personal and business debt. Lenders also look to mitigate risk. That means they're looking to offset risk, because from the lender's perspective, personal credit will provide an additional layer of protection against risk of you not paying or your business not paying on the loan. Small businesses are often considered riskier borrowers than larger, more established companies because they may have fluctuating cash flow or they may have less predictable revenue streams, uneven income. By reviewing your personal credit, lenders may better understand the overall financial picture and gauge the likelihood of loan repayment. So if the lender sees that both your business and your personal credit are strong, they'll feel more confident in extending the loan to you, which may result in better terms and even lower interest rates. So for sole proprietors or partners in a business, there's often no legal separation between personal and business finances. And in these cases, the owner's personal credit is especially critical because it directly reflects the ability to manage both personal and business credit. Without a separate business entity, lenders will more heavily rely on your personal credit to assess the risk of lending to your business. So, how does personal credit affect your business loan terms? In other words, repayment, interest rate, and so on. Your personal credit doesn't just influence whether you'll get the approval. It may also affect the terms of the loan, including your interest rate, repayment, and loan amount, as I said. Now, here's how the personal credit can impact the terms that you're offered. Now, the interest rate. Of course, one of the most significant ways is the interest rate, so on and so forth. Lenders are more likely to offer you lower rates if they see you as a lower risk. They'll give you a higher rate because they price for risk. So the higher they perceive you as a risk, the higher the rate that they'll give you. On the other hand, if your personal credit score is low, they're going to charge you a higher rate to compensate for that. For example, if two business owners, you had two owners, one has a 750 score, the other has a 600 score. The owner with the 750 score will likely receive a lower rate, making their loan more affordable than the person with the 600 score. Okay, your personal credit can also affect the size of the loan that you're looking to secure. The lenders may be more willing to offer you a larger loan amount if you have strong personal credit, as this again reduces the perceived risk of default. Conversely, if your credit score is lower, lenders may limit the amount they're willing to lend, potentially making it harder for your business to access the funds that it needs for growth and expansion. Borrowers with strong personal credit are often offered more favorable repayment terms, such as longer repayment periods or lower monthly payments. This flexibility can help your business manage cash flow more effectively and reduce the strain of repaying the loan. And in contrast, if your personal credit is low, you may face short return payment periods and higher monthly payments, which can put additional pressure on your business's financing. Now, if your personal credit score is strong, lenders may be more willing to approve an unsecured loan, such as similar to what you would have with a credit card. You won't have to provide any type of collateral, such as property or equipment, to secure your loan. However, if your personal credit score is lower, lenders may require collateral to reduce their risk. That means that if your business is unable to pay and repay the loan, the lender can seize that collateral to recover their funds. Very similar to the repossession of an automobile for unpaid payments. So, can you strengthen your personal credit to help with your business loan applications? So, if you're concerned that your personal credit score might not be where you really want to see it, and that it could affect your ability to secure a business loan, there are steps that you can take to improve your credit worthiness. However, the strength of your personal credit you want to strengthen it before you apply for that business loan. So you want to start with a lot of the typical things that you would do to improve your personal credit, like paying your bills on time. Because of course we all know payment history is one of the biggest factors that go into your score. It's 35% of your business credit score calculation. So you want to make sure that that's all good. You want to reduce your card balances. So if you have revolving account credit cards of your own, you want to make sure that your balances are low on those revolving accounts that you have on the personal side, so it doesn't look like you're overextended personally. Aim to keep your utilization below the normal industry standard, 30%, no more than that. The lower, the better. And of course, we know the example, $10,000 credit limit. You don't want to have more than three. $2,000 is better. The lower is the better. And of course, you want to check your credit report for any errors. You should be regularly reviewing your personal credit anyway, to make sure that it's in good order. And so you want to check for errors and accuracies that could be dragging your score down. If you find any, then you want to follow the normal dispute processes used to repair credit and manage your credit, and you want to do that. If if you're unwilling or unable to do it yourself, you may want to hire a professional to do it for you. I also recommend, use it, knowing how to do that, but take the time to do that. And it might seem counterintuitive that you're taking a step back to do that and you're doing a lot for personal credit to help with your business, but this is to help with your business application. It's not helping your business credit, it's solidifying your personal credit. So if you got a strong business credit, or if you're working on strengthening your business credit and you have a strong personal credit and you need funding now, this is a way to get that, to make that happen. So, of course, you want to limit credit card applications, keep those inquiries in check so that they don't drag your personal credit score down as well. You want to build positive personal credit by continuing to, but you don't want to add anything, you want to continue to do that. You don't want to close any old accounts that are adding to your positive credit history through that length, because remember, the length of your overall credit history helps in your score too. It's very difficult to have credit scores above 700 if you have short credit history, or unless you're starting at the beginning, it's that one account and it's not really considered real. But the length of your credit history plays a determining part of your score. Of course, we know that. You want to keep those older accounts open, use them sparingly and responsibly to continue building your credit. Now, although we're looking at business credit, building it, and although we're looking at personal credit and fixing it up to help with business applications, we still want to continue to maintain separate personal and business credit. Because while your personal credit can play a role in the application, it is essential that you keep separate both your personal and business credit as well as your personal and business finances. Don't pay personal loans out of the business account. Don't pay business expenses out of the personal account. This not only protects your personal assets from commingling, but it also helps you establish a strong business credit profile over time. So, here's some ways to start separating your personal and business credit if you haven't done so already. First of all, you want to start with a legal business entity for the business. So you want to have an LLC or a corporation, and the business is that, and it's totally separate from your personal finances. And it'll help you allow you to start the process of building business credit, because you need that as part of that process. You want to open a business bank account. It's in the business name with you as the agent, and you have control over the account, and all your business revenue should go in that account, nowhere else, and then all your business expenses should be paid out of that account. And not only does it help you with building credit, it helps you with clear financial records, because now you have a running tab both on your credit account and the business itself, showing all your expenses. Okay, as you move up the tiers and you establish business credit, you eventually want to apply for a business credit card. That is a valuable tool for building business credit. In addition, you want to apply for the company, the card in your company's name, and use it to cover business related expenses. You want to make sure to choose a card that reports to your business credit bureaus, as this will help you build your credit score over time. And of course, you want to pay your business debts on time, just like you pay your personal debts on time. Timely payments are crucial for building strong business credit. You want to make sure that you pay all your business related bills, loans, and credit card balances on time to establish positive payment history and improve your credit score. So while your personal credit does play a significant role in your business loan applications, especially for small businesses and startups, it is important to work towards building strong business credit profile as well. By maintaining good personal credit, separating your personal and business financing, and responsibly manage both, you can increase your chances of securing favorable loans and support and getting the long-term success in business that you need to grow your business and scale it. Remember, Lenders consider your entire financial picture when evaluating business loan applications. So taking steps to strengthen both your personal and business credit can help you access the financing that your business needs to grow. So I hope you guys find that helpful and informative. If so, please like this video. If you know anyone that can benefit from the information here, please share with them by hitting the arrow below. Please comment below. Tell me what you think of this video. Tell me if there's anything else that you wanted me to add that I missed. And tell me if there's any other topics or subjects that you want me to discuss in future videos. And please subscribe to my channel, the YouTube channel, and you can hit that button for notification, and you can be able to receive notification when I upload many more videos. There's lots of help here. There's lots here. But I just want to let you guys know that I'm here to help you with your credit and your personal, business, credit, and funding needs. And that if you want to work with me, feel free to reach out through all the contacts in any of the ways that are in the description and the show notes, and I'd be more than happy we can get together and I can work with you to help you. If you're a startup, help you get started. If you're trying to grow, I can help you with that as well. So until the next video, you guys take care and good luck on your entrepreneurial journey.